It is Delta Tuesday on a day where the market is moving up and down intraday here. Matt, a little bit of a snapback rally. How you doing this morning?
Tim, doing very, very good. And any day the market goes up gives the buyers a little bit of hope, but it's a false flag. You can't trust any buy movement on this in this market until we see some type of sustained movement.
Correct. One green inside candle. It is interesting, and we always work through our daily routine without emotion about it. Yeah, it could be a bear retracement setting up. You could easily have some carryover day over day, Matt, but we are going to have to get strong earnings out of Facebook, and we will be getting into that tonight. Got a big show planned for you here today, guys. Halftime report from Tackled Trading. If you are new to our channel, make sure you subscribe, click the bell. If you're halftime crew, welcome back. Let's rock and roll here. S&P 500 up just a hair, Matt, 0.5% on this market. Literally, I mean, you can move that in 5 minutes. It has been moving like that every few minutes. Intraday, you've got a lot of back and forth, but overnight it did want to recover. We have some strong earnings. Give me a read on the levels. Where would you find support and resistance on the S&P?
Well, it depends. I mean, are you talking intraday or are you talking on a daily perspective? Because those are going to be dramatically different. If you're looking at from a support level, just overall channel, you're looking at this 2600 level. The market has loved those significant whole numbers. And one of the reasons is, Tim, is because of the volatility over the course of the last month, it's been very difficult to sustain any type of technical level. And so when you're really kind of thinking about it, you think about, okay, well, these significant whole numbers, those are very easy to kind of look for, very easy kind of to see on the chart. You also have a lot of activity over here last in 2017 with resistance at 2600. You have a lot of activity both on the daily chart, the intraday chart here in February when this market sold off originally. Then obviously you had it here in April or March. They had it here back in May. So you're really kind of looking at 2600 as that ultimate daily support level. A sustained break of that, and you're obviously talking about something, something triggering to the downside pretty aggressively. So I'm looking at 2600 from an overall daily perspective. 2700, that's we've been talking about that for weeks, for about a week now. 2700 on the intraday as well as on the daily chart would be resistance here. Anything in between those levels, you're just going to have massive intraday support and resistance levels. As you can see yesterday, Tim, I want to get your take on it, because yesterday the market went up, then got smoked, then went back up strong into the close. Give me your take on that.
Well, I think the market makers just literally got out of the market. At the end of the day yesterday, a lot of that strong selling pressure, it was fascinating to watch. One of the key indexes that I trade, Matt, is RUT. And I saw the bid and the ask spreads. What was normal for me to expect would have been about a 1 or 2 point spread, opening up to 5, 6, 7 points on some of the option plays. And
I know. It's amazing.
That's an indicator to me that market makers said, no, I'm not playing, and they pulled the bid. They pulled the bid in the market, and then you saw it sell aggressively, stop losses getting triggered, boom, 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 down the chart. Little snapback rally when they brought it back in. You see the volume coming in, and it tried to carry that through the intraday. We even had a strong opening market here. We now are up at the top. I think it's a crapshoot from now till the end of the day from here, quite frankly. The pricing is very fascinating. Sitting at 1,500 on the RTY is about, you tell me, that's been the key level for 4 or 5 trading days now, Matt, where it wants to come back to 1,500 like a magnet, because buyers and sellers are both, kind of making bids at that price.
Well, yeah, absolutely. 1,500. We've talked about that on the RUT before. It's both been an intraday support and an intraday resistance level. A close above 1,500 would be a positive thing for the Russell 2000. You could kind of anticipate a retracement coming back up into the 1,540 barrier, which is where I put the daily resistance channel on the Russell 2000 is 1,540. Ultimate support is 1,460 on the Russell 2000. So if you close above 1,500, you could anticipate a little bit of a snapback into the 1,540 channel. However, at this moment, Tim, anything can happen on the daily basis in this marketplace. We've seen that for weeks now. It's the open's weird. The close is the most important thing in the marketplace. The close carries through the next through the overnight market. That's what I've been seeing. You look at the S&P 500 as it closes strong yesterday. Look at what happens overnight. Okay, this is where the market closes. Then overnight, you see this strength coming back into it. And I've seen this recently where overnight it kind of carries into it. Those international markets respond to what the US market is doing. And so a close above that 1500 level on the Russell, a close above, intraday resistance channels on the S&P or on the NASDAQ, you can expect a little bit of carry through. But Tim, there's so much information out there, including Facebook tonight. So, I still, regardless of what the market does, I still think this is a week where the best trade is to be patient. That's the best trade. Be patient. Wait for the volatility to subside. We have massive earnings coming out on Facebook tonight. We have the biggest earnings report in the world is Apple coming on Thursday. I just think it's one of those moments where, we take a couple days, you do your day trades, you do your swing trades, lower position size, be very cautious, very conservative. We're going to get a sustained trend one way or the other at some point in the near future. I just don't think this is the week where you act aggressive in the market.
No, I mean, if you ever need to be reminded of the most important part of discipline, it's in a week like this, in a market like this, because Matt, if you are patient, you probably will succeed. If you have a well-designed trading plan, the number one thing that's going to make you impatient is if you oversize a trade, right? If you're over leveraged and the movement is starting to make it emotional for you, that would be a mistake. Back on the S&P for a minute, I want to go through a couple of companies. Story of the day, in my opinion, is General Electric. And I was thinking about this one. I was even talking to young Cody, our producer, about it before we got started. Down 8%, obviously not a Dow component. I was corrected on that last earnings report. Now it's just an S&P 500 component. One of the blue chip type names in the market map, but they do not have blue chip fundamentals. People who've been holding on, believing, well, it's GE, it's a great company, it's got to go back up. I was going through their earnings report, Matt. They have a deeper regulatory probe coming. They have more restructuring coming. They don't know what they're doing with their business right now. It does seem like a ship without a direction.
And the same people that are holding GE are the same people that hold Sears.
Yep.
And they watched it go to zero. And they're going to watch GE go to zero. The only difference is GE might get bailed out and Sears never would.
Well, and they might spin off some of their debt-driven assets and then bankrupt those and then come up with a new core business. They're in a lot of trouble, though. Obviously, I don't have to say that. It's clear on the chart. Stock is down about 70% here in just the last couple of years, and even 7% here today. Obviously, an underperformer. Some traders might instinctively come in incorrectly, by the way, and say, "Well, I can buy GE for $10." Well, good luck.
Go give it to charity. Do some good with it.
That's right.
Go burn it. Do something else.
General Electric, a big name here today. Let's go on to the Dow Jones Industrial, if you would. I think the blue chip names are going to be important as we move through this week in the market. Dow, relative strength in my estimation, but still under the 200, an inside candle, selling on yesterday's close, and now we rallying in here today. Matt, a few Dow components, Coca-Cola is one of them, which had earnings last night. Pretty okay, pretty actual boring chart. Little bit of a breakout, but you have that tall tail from last week that makes me want to hesitate. What's your read on the Dow?
My read is very simple on Coca-Cola. What's wrong with boring in this marketplace?
Nothing.
There's nothing wrong with boring in this marketplace. And you know what? We've talked about safety. Coca-Cola is one of those. Give me a stock that's breaking out of a very clear resistance channel at 46.75. This is not a swing trade type situation, Tim. That you don't swing trade Coca-Cola. You position trade it. You invest in Coca-Cola. So to me, this is not a trigger on a swing trade, but it would be a trigger on a position trade. And it's a little bit of same thing with Walmart, or the same thing with Verizon, or the same thing with utility stocks, or Coca-Cola. It's a good stock in this environment where it's not very volatile. It's not going to move a tremendous amount. It's going to pay you a dividend, and it's not going to get its ass handed to it like an Amazon, a Facebook, and Netflix, or any of those growth stocks. So boring's not bad in this marketplace. Back
out to a weekly chart then. I don't mind the thinking on this. Let me look at the big picture. Yeah, you got a couple of points of upside.
A break of 47 is significant here. It was massive resistance back here in 2017. It was massive resistance here in late 2016, 2017. Obviously broke out here and then got smoked back down with the February 2018 market. But Tim, if you're an investor in Coca-Cola, if you're looking for some safety play here and you don't know what to do, give me a Coca-Cola, give me a Verizon, give me a Walmart, give me some safety plays to offset some of those growth stocks.
A lot of blue chip names flashing in front of my screens here this morning, Matt. Intel up 4%, Tackle 25 stock. I'm looking at a chart like this, though. It's coming back into a downward channel. You cannot play short on a 4% up day on a solid green candle above moving averages. Same thing we just talked about with a lot of companies. I still like the fundamentals of the company, Matt, but you have a downward channel there that could present an opportunity back down if the market does turn over.
Well, we were talking about Intel in the pre-production show, and we get on about a half hour before the halftime report. We just talk markets with Cody and myself and Tim, and we were looking at Intel here, Tim, and I basically said this. I said, with the strong movement that you're seeing here today, any short that was looking at shorting, I think that's off the table now. It's clearly breaking up above that 50-day moving average, which has acted as resistance. Is back up above the 20-day moving average. It's showing relative strength against the entire marketplace. You're up 4% on the day, Tim, and you're going to have days like this when in a bear market where you have these massive snapback rallies. But if you're a short looking at a potential short because it was kissing off the 50-day, to me that trade's over.
Yeah, probably. JWN and Walmart, actually, two of our picks yesterday. Walmart on the Dow, JWN making a huge move here today. One of our picks of the day, obviously just a blast out rally, Matt. Retail is showing a little bit of strength here. That's a great chart. If you were in a market like this and you were swing trading, you catch a big green candle, where do you roll a stop up to? Because that one's a tough technical decision. You have to go down to the intraday, don't you?
Well, the trigger went above yesterday here at 62.70. We talked about this one. It reminded us a little bit of Apple between 215 and 223. Apple obviously didn't trigger above the 223 mark to get us in. JWN was on the stock report, or was it option report?
Options, yeah.
Option report. We talked about it yesterday. Tim, when you've got something like this, your first target has to be this previous resistance here. Mm-hmm. It absolutely has to. So you're sitting here at resistance at 66. You had 1-2 days to get up into that level. You're up close to 6% on the day. If you were looking to adjust that stop loss, Tim, and I'm just going to tell you, honest to God's truth here, I'm adjusting it right there to 65.87.
Yeah,
right.
I don't think you give
right underneath the low base, right underneath the low base there. And so, to me, I think in this market condition, when something like Nordstrom gives you that 6% movement, and you're like, wow, I was expecting it to get up there in 3, 4, 5, 6 days. It did it in 2 days. Don't get greedy here. Adjust that stop loss, scale out at your first level of resistance.
Another mechanic that we've actually talked about on the halftime report here on Delta Tuesday. By the way, every day we're going to have a theme that we're developing, and Tuesday is our Delta day. Matt, if you were in long call, this would be a day to adjust it to a bull call.
Oh, absolutely. We haven't talked about that technique in a few weeks here, but that's one of our favorite techniques. If you have any concern at the resistance level, and Tim, you outside of the market condition, there's no concern here on this individual component, this individual stock. JWM showing strength coming into that resistance. Typically on a stock that's showing strength coming into resistance, I'll be a little conservative with adjusting that stop loss. So what I said about JWM aggressively adjusting that stop loss is more because of the market condition than it is this individual component of the market. But one of our favorite techniques, if you're in a straight directional call position, is to roll that into a bull call spread when it hits that first target. So so basically, if you're looking at this from a pure technical perspective, it comes in, triggers above 62. Okay, so let's say you buy an at the money call option at that point, triggers above 62, gets into your first target at 66. At that point, your call option will have a delta right about 0.75, Tim, instead of the 0.50 that you bought. Then you roll that and you sell a 0.25 delta to offset the risk coming back out. That brings a little bit of cash flow coming into you. It offsets your delta, your risk in delta. It's a very, very good managing technique, no doubt about that. Yeah, you're on mute.
I am on mute, so I'm going to bring in my voice and actually say something of substance. Thing about it is techniques like that are what really make your account, because you don't want to sit on negative theta. When you're doing long call, long put, you have to be a swing trader. And when you are catching these big moves day over day and you got a good trade, go ahead and knock down some of the delta by adjusting it into the bull call. Love that technique, Matt.
Very quickly, because it is a very important technique. You have risk to delta when you buy a call option, right? You have risk to theta when you buy a call option, correct? And you have risk to vega as well, right? You have those three risks. So when you do the technique that we're talking about, when you buy a call option and then you roll it into a bull call spread at that first target, you're minimizing the risk to delta, you're minimizing the risk to theta, you're minimizing the risk to vega, you're bringing in cash flow into your account, and you're offsetting risk. It's a wonderful technique.
Top 5 gainers on the Dow today: Intel, Nike, Boeing, Verizon, and Walmart. Top 5 losers: IBM, still getting pounded. You know, the market wants to come back and IBM still can't make a rally. Nike, finding the 200 here, Matt, but you can't really.
I want to, but I'm not going to.
Can't. Just can't. I mean, there's
I don't trust it.
I guess you could map out some kind of like call ratio, backspread, position trading style, but the market is changing so much day over day over day. Well, I like to keep my capital ready for other types of trades.
Yes. May I do something like a diagonal, horizontal, or a back ratio, or something advanced just because I like the company and I like to trade? Yes, I might do something like that. But for halftime purposes, there's no trade here.
Yeah, I agree. Interesting stuff going on in the credit card companies, Matt. MasterCard, Visa, American Express. I want you to take a look at these three because Visa was one of the top sellers on the Dow. MA earnings, boom, we're down. Obviously, some pressure here. They had volatility.
They beat on EPS. They must have missed on revenue or guidance.
It makes me wonder if we're just rotating out of finance and this is just another shoe to drop. Take a look at AXP and then Visa last. All of them are kind of under pressure here. AXP sitting on support. And then Visa is one of the biggest losers on.
I kind of like American Express there.
Yeah. How do you read all this?
Oh, well, finance has been the worst performing sector, in my opinion, for the last couple of months, and that includes basic materials. So, you know, how I read this, in looking at MasterCard, obviously the Visa and American Express are getting beat up a little bit because of what the miss on MasterCard's earnings. That's just industry related, right? But what I'm reading here is you're reading, you know, stocks that are at the 200-day moving average. MasterCard breaks because of the miss on earnings. Visa's sitting here at the 200-day moving average. American Express, AXP, sitting at the 200-day moving average. It's par for the course. I mean, what's there to read here? I mean, honestly, how many times we've seen stocks at the 200-day moving average get blown through the water over the course of the last week? So I'm tempted on American Express simply because it's an easy trigger and it's an easy stop loss. Look at this level right here. Okay. So you got clear levels of resistance channels right there between 102 and 103, right? You have a clear level of support right here at the 200-day moving average, as well as the significant hold number in $100. So to me, you could easily trigger above 103 with an easy stop loss underneath 100. That to me, if you take it outside the if you take it outside the market condition, that's a very good position trade, Tim. That is a very good position trade with minimal risk on on a stock that's really, really, really good. So I'm tempted here on American Express, but if you take into account the volatility of the market, it does give me a little bit of a pause. But I do like that technical setup, and I do think you should put it on watch list.
Yeah, some of the better performers on the NASDAQ we're going to get to here in just a minute. Interesting stuff in finance. Go on to the NQ contract, though, and let's look at the big picture before we break down individual components. Facebook earnings tonight, obviously going to be very much watched. Last quarter, Matt, 25% move on their earnings, not expected, came out of nowhere and put that stock into a downtrend for 3 months now. So it's going to be very much anticipated. The NASDAQ is sitting around the 6,800 mark, Matt. And for it, technically, you should see a rally back to 7,000 bear retracement style, or just a flat sell-off from here. I can't imagine it's just going to sit right here. Okay.
Well, the whole market's overextended right now, Tim.
Yeah.
Right. In the short term. I mean, let's give it a little bit of perspective. So in the short term, you are looking at a marketplace that from a yield perspective is towards the bottom end of its channel. It's towards the bottom end from a potential average yield. It's to the bottom from an RSI. It's to the bottom from, Bollinger Bands. However you personally want to analyze overextended behavior, it is at the bottom of that channel. So technically speaking, you would expect something to come back up into resistance on the entire market. The Russell 2000 coming into 1540, the NASDAQ coming into 7,000, the S&P 500 coming back into somewhere around 2740, 2750. So you do expect that from a technical condition. And a lot of times when you are overextended to the downside, the market is looking for a reason to buy. Facebook could be that reason to buy. There's other reasons to buy as well. And I don't want to trigger a rant, but there was a headline today: market up on hopeful Chinese-U.S. trade deal. So let's not get our hopes up there, but there was that headline there. And so the market does want to buy, and it wants to come back up into resistance. But Tim, if you miss on Facebook, look what happened yesterday in the last hour of the market. That market was absolutely crazy. And for those of you who don't actively trade on a daily basis, okay, you might not see this every day. But Tim, when the Russell 2000 opened up its bid-ask spread that wide, and the market maker basically telling us that we want to go home, if you want to buy insurance, you're paying a premium. If you want to get into a short, you're paying a premium. That thing can drive the market down, Tim. And I don't want to get into it today because it's not going to happen. But Tim, I said to you last night that I foresee a limit down coming sometime in the future.
Hey, in my opinion, well, first of all, I'm bearish in the market. Not today. Today, you're getting a snapback rally. You got to trade day by day and adjust your delta. I'm hedging. I'm cautious. I think every trader on the planet is right now, and you've got to have position sizing down. You've got to have a good trading plan and be disciplined. A bear rally is in the cards, Matt. I mean, you could easily see these big, huge rallies up, but going limit down, it would not surprise me at all. In fact, I wouldn't be surprised by anything in the market that we're in today, which is why
Last time it happened was November 9th, 2016, overnight.
Yeah, it's fascinating. And by the way, President Trump, you didn't want to trigger a rant, but here we go. I'm going to get into it anyway. President Trump said that he's going to have a great deal with China. Now, we have elections next week, Matt, and I don't want to bring the politics part of it.
Here. The next week, nobody should listen to a word any politician says last month or anything said coming into next week's elections. It's complete lies, and it's everywhere. It's not just Trump. It's everywhere.
Yeah, it's not right, left, or anything, guys.
Trump leads it, but it's everywhere.
Well, and think about it. I've been thinking about this for a while, Matt. You and I have talked about it offline. Could it be that the president would like to come in and give the right a boost by saying, hey, listen, we got a deal done with China? I mean, would that surprise you this week?
Tim, we have an invasion of, poor people coming in, and we have a, Chinese trade deal, and we got a massive tax cut for the middle class, and all of that is a lie. All of it is a lie. That's why you can't trust it. It's politics 101. That's all it is. There's no trade deal with China. China has not balked one iota here. I don't see President Xi balking on a trade deal right now. And I don't think the market's going to, and I don't believe the market's going to sustain any buying behavior because of that hope of a Chinese trade deal.
I expect more headlines through the week. How the market interprets it will be.
Here's the most important thing, Tim. Facebook's earnings, Apple's earnings, those two, and then the unemployment report on Friday.
The jobs report on Friday.
The truth in numbers. Don't listen to what politicians say. Truth is in numbers. It's in the price action. It's in the economic reports. It's in their earnings reports. That's what's going to drive this market one way or the other until the Fed steps in and announces quantitative easing forward.
NASDAQ actually breaking back down here a little bit in the intraday. We'll be watching it throughout the show, obviously. Couple of stocks I want to look at, though. TTWO, Take Two International. And I'll tell you, Matt, I don't play the game, but the second largest video game launch of all time, what is it called? Red Dead Redemption or something like that?
I don't know.
Red Dead Redemption 2. They made $725 million worldwide in their first 3 days of sales. Do you play this game?
No.
I think it's like in the Grand Theft Auto type style. It is a video game console type game. Second largest video game.
It's a Wild Wild West, and it is kind of like a Grand Theft Auto, but it's in the Wild Wild West, and it is an awesome game.
All I know about the game is it's on every bloody podcast I listen to, and it's driving me nuts. So that's all I know. I don't know much about the game. The only game I play, Tim, is I play zombies with my son. That's about it.
Yeah.
And then I play Polytopia with you when I'm trying to go to bed.
Sure.
Yeah.
I mean, here's the thing about a news story like this. It's going to grab the public's attention, obviously market's attention as well. It gapped up 10%, Matt. But look, there's no carry through on the candlestick.
You got to love the movement here, Tim. It gapped up, tested down, and then came right back up. It's a fascinating look at this price action over the course of the last week, Tim. Talk about volatility. That reminds me of a marijuana stock more than a gaming company. But when you look at just kind of the snapback here, I'm getting interested here, Tim. So here you got the kind of the movement coming into the overnight hours. That's on the news event, and then it comes back down on the intraday. You gotta like the strength coming into that. I'm not going to trade it. It's not a company I trade. I'd have to go look into it quite a bit more, but it's interesting.
Yeah, I agree. They're up 10% here today. Obviously, volatility type play. KLAC had earnings, Matt. They're up 6.5%. There are good stories in the market every day, guys. You know, the headlines are not always negative. But
well, they're good until they're not, because this is going to come back into resistance the same way Goldman Sachs, Morgan Stanley, JP Morgan did, and it's going to get smacked back down. So enjoy the win for the next couple of days, investors in whatever this company is, KLAC.
Yeah. I always called it clack. I was throwing you a softball there. You knocked it out of the park.
I said something that might have been offensive, so I'm going to keep that one for myself. But yeah, enjoy the win for the next day. It's not going to last.
NVIDIA is up 5% as well. NVDA, Matt. In fact, they're carrying even more momentum through the day. But this is the kind of thing in a bear market. They're going to grab the headline. They're making a recovery. But that stock has been destroyed in the last month. Obviously, a little bit of a snapback rally here, but it's kind of why the whole NASDAQ is.
Okay, so let me paint a picture. Let me paint a big picture here. Headline, NVIDIA up 5% on the day. Amazing day in NVIDIA. Or here's another headline. NVIDIA down 33% on the month. That's perspective.
Yeah, for sure. There's no doubt about it. Some of the bigger losers, CTSH down 4% on the NASDAQ. Ulta, one of our companies we were looking at as a long potential, down 4% as well. Sitting on support here, you know, and I like the breakout if it will break that 290, but this is why triggers are so important, Matt. It came back. It is now on the support level. It's got to hold that if you are a bull, and obviously somebody might even be looking for that on the downside.
Well, here's how you approach Ulta, okay? And this is how you approach every stock that you're looking at. We talked about this yesterday. It's got to break 290, right?
Mm-hmm.
Very simple. I'm going to go put an alert at 290. At or above 289, that's fine. And now I don't have to look at it until it doesn't.
Till it does it. Yeah. Using alerts and organizing your watch list that way is very important, because you're not going to sit and stare at Ulta all day. It might not even break out. First of all, it may not break out for months. We have no idea when it would take off and run. It's going to be an interesting one. You know, a lot of volatility in the market here today, Matt. Some in obviously commodity markets. I do want to break those down as well. Let's get into, you want to do energy or metals first?
Let's do dollar, then metals.
Dollar bill, y'all. Dollar's been real strong. It's been bullish. You know, it took off. Matt, we've talked about the breakout here. When it broke 96, we've now run for about a week and a half. And anybody playing the Forex market, those dollar cross pairs have been in play. The Aussie dollar, the New Zealand dollar short. Some of the better plays.
Anybody who watched my Forex report from last week's made some money too.
I agree with that. The whole thing is there were a lot of really, really good triggers. And I know a lot of traders, they're moving into Forex and commodities so they can get a more balanced approach to markets.
Both commodities and Forex are easier plays in the stock market right now.
There's no doubt. I don't even think it's a debate. Look at the cleanliness of the candles, guys. You're not seeing the random crazy volatility all over the place. You're just seeing up and down, right? Technically driven. Now, that being said, Bank of Japan has an event tonight, and the Bank of England has an event on Thursday. Be aware of central banks when they do report on interest rate policy and all that kind of stuff. What's your read on the dollar?
Tentatively be somewhere around the 10 p.m. Eastern Standard Time, somewhere around that level. Maybe 10 to midnight Eastern Standard Time, I'd say, with the Bank of Japan. Then you have you have also coming on Thursday, you have more announcements. So, you know, obviously you want to be a little tentative coming into a major central bank announcing monetary policy. I expect the Japanese to kind of maintain their monetary policy stance. I don't see them coming off of that. They've been very, very dovish on a monetary policy for I want to say a few years, but really it's a few decades now. So I'm not saying anything that nobody else already knows in the market. But that should show some strength in the dollar. But if you're going into this event, because a lot of people on the East Coast, if they're trading currency, Tim, they might be sleeping, right? Make sure those stop losses are adjusted. Make sure you're hedged, because it could be a wild ride with the Japanese tonight. I love the dollar right now. I've been liking the dollar, obviously for about a month now. Last week, I was very strong dollar in the Forex report. But now you're sitting at a resistance level, Tim. I like the strength coming into that resistance level, but you're starting to get a little overextended coming into that resistance. And everybody knows me. If you've been watching this report for a month, 2 months, 3 months, however long we've been doing it, I do not like overextended behavior coming into breakouts. It's just not a technical pattern that personally I am comfortable with, Tim. And again, when you're looking at the concept of overextended, there's a lot of different ways to do that. You could look at Bollinger Bands. You could look at indicators such as stochastics or RSI. We did a deep dive on RSI last Friday. So if you want to review that, go back to that last Friday halftime report. But the number one way I like to look at it is from a potential average yield perspective, which one of my mentors, Jeff Crystal, taught me many, many years ago. And when you're looking at potential average yield, you're just looking at average price cycles within a trend. And so if I'm looking just at this trend, Tim, we go from 93.80, and let me get the exact numbers here, 93.80 to the top of the first channel at 96.10. So that is a $2.30 movement. Then you go from the bottom of the channel here at 95, and now you're coming into 97. Okay. And you could go down all the way down to this wick here, Tim. I never do. And that's the eternal debate between technicians. Do you use the wick or the candles, right? Do you use the wick or the candles? I always like to use data, right? Well, for me, you got one data point, which could have been one small earnings economic report that ticked it down, came right back up. What I'm looking at here is just look at the level of evidence right here, that 95 level, right? So I go from 95 up to 97. That's a $2 movement. So you're looking at a technical movement of $2.30 by $2, Tim. That's within one ATR of the overall potential average yield. So for me, when I'm looking at this, I'm saying, okay, we're overextended coming into this level of resistance. I do love the strength ever since it did break out mid last week, Tim. I love the strength on the dollar right now, and quite frankly, I believe in the fundamental nature of the dollar versus the other currencies out there, Tim. And again, long term versus short term is a different discussion, but right now, I'll give you three choices, Tim: yen, euro, dollar. Pick one.
Dollar. And okay, I don't love fiat currency.
Okay, no, you don't. But is it even close?
No. Mario Draghi has printed enough euros to drive that thing lower for another forever until they change policy.
European debt crisis, Italian debt crisis, Greek debt, the pigs, go on and on and on. I'm not convinced the euro exists in 10 years. Okay, so Japanese yen. Okay, if you buy the Japanese yen, here's what you're going to do. You're going to lose money. They have a negative interest rate. Why would you do that? So my point is, if you buy the dollar right now, look at the U.S. economy. Don't look at the U.S. market. Look at the strength of the U.S. economy right now. Grew at 4.2% in quarter two, 3.3% in quarter three. The U.S. manufacturing data is up. There is some weakness in the U.S. economy with housing. There is some weakness because of rising interest rates. But look at the relative strength of the U.S. economy compared to China right now, compared to Russia right now, compared to the Eurozone right now, compared to anything out there right now. Look at the interest rate on the dollar. You're getting paid 2.25% on the dollar. You're getting a negative interest rate in Europe. You're a negative interest rate with the Swiss. You're a negative interest rate with the Japanese yen. So yes, I believe in the fundamental short-term value of the dollar. I like the technical movement on the dollar here as well. Look at that 97 level. That is the key level for me here. If it breaks that, it could run. But for me, I'm a little cautious in the next couple of days with the dollar. I anticipate a little bit of a slowdown, but over the course of the next week, and I don't know if I'm on the Forex report this week or Keith, I'm not sure, but over the next week or two, I do believe if you missed out on the buying of the dollar from last week, there's going to be a wonderful, wonderful buying opportunity on the dollar coming up there in the very near future.
I'm with you. I mean, the pound dollar selling, the Aussie dollar not breaking down yet, relative strength actually from some of those commodity based
It's
currencies.
just setting at support.
Yeah, sitting on support, waiting for a breakdown. I'm with you. I love the currency markets, and you are on the Forex report this weekend. I just double checked, so I'll look forward to that analysis. The reality is, guys, if you don't trade currency, start, practice, learn how to
Well,
do it.
and let me put it out to the halftime crew, because my style on when I do the reports, guys, my style is I write a technique and then I do the report, right? So my technique on the dollar last time, I can't remember what it was, but the time before that, I talked about the 24-hour market cycle. 2 weeks ago, I talked about correlation within currencies. This week in the commodity report, I talked about, gold as a safe haven investment. So if there is a specific topic you guys want me to talk about in the Forex report, let me know here in the halftime report or over there on Twitter, Matt Justice 13.
Very good. Let's break down commodities as well here, Matt. Gold, silver, all of the different metals. Let's start with crude oil, though. Just an ugly chart, ugly performance. It's stuck in the middle. Until you break above 68 or below 64, I don't think you have a trade here unless it's cash flow or theta. Any take on crude oil, especially in front of EIA tomorrow, and
No, you
we're
don't
waiting on data.
You don't touch the crude the day before EIA on a swing trade, Tim. You wait for the EIA numbers to confirm your decision to make a trade. So I do want to point out, though, a close under 66 would increase the probability of crude going down to 64. That to me is an intraday support level. It's a daily support level. So if you're looking at crude, 66, a close under 66 to me is it's not significant, but it does increase the probability of it going to 64.
Yeah, all the energy commodities are down here today. Heating oil, natural gas, crude oil, and Brent all under pressure. Give me the metals, though. Gold, it's down 0.5%, Matt. The dollar up, gold down. And yep, GC, I still love this chart. I'm going to love it until it changes. I mean, any noise like this up and down 0.5% here or there doesn't change the overall pattern. The whole chart, in my opinion, was built on that green candle 2 weeks ago. When it broke resistance, now we're fading up. It is on a little retracement, though. We've got support right here, Matt. What should we read on gold?
If you liked it on the breakout at 1220, you're buying it right now.
I agree. Yeah, I agree with that. Silver also looking.
It kissed the 20-day moving average, a rising 20-day moving average. It kissed its head right there at 1220, which we've talked about for weeks, which was an old resistance level, old support level. So it's not confirming, Tim, but there's no swing trade on gold. You don't swing trade gold. You swing trade GDX. You position trade and invest in gold. So for me, it's coming back down. If you liked it a couple of weeks ago on the breakout channel, a position trader would still like it right now.
Yeah, I agree with that. I'm looking at the advanced decline lines across the market as we're at the halftime point of the halftime report here, guys. I want to take a moment and pause and say, hey, welcome out, halftime crew. Advanced decline line, Matt, about 23 stocks up on the Dow, 7 down, 360 up on the S&P, 130 down. Mostly showing some intraday strength. It doesn't mean we're going to hold it, and anybody's guess. If the market ends where it is today, tomorrow at the close, or anywhere lower, worst month in the stock market in 10 years, Matt. Not a good sign. This is where October scars are built, right? And everybody else, welcome out, halftime crew. If you are watching our show, give us a quick like and share, Matt. Interesting action here today. We're doing Delta Tuesday today, and you and I were talking before the show. We want to do some prep on triggering, okay? And every day when we have our halftime report, we're going to have one theme about the trading, market. And GDX was the stock that you want to talk about triggering, Matt. Kind of walk the halftime crew through that.
Well, we were looking at GDX yesterday, and it was on the reports there as well, with both the stock and the options report coming out, tackle trading this weekend. It hasn't confirmed yet. And this is where the skill set of a trader has to be on point, is the topic we call triggering. Triggering is where you get into the trade. It's where you put your order in, your contingent order to buy call options, or your OCO order to buy the stock, whatever it is. It's your trigger to get into the trade. Now, in terms of that, the triggering impact is, and there's a couple different techniques here, okay? The first technique that you can look at from a triggering perspective is to trigger above the high of the candle. Okay, so if you're looking at this, the market coming down to this support level right here at 19, which I really, really like this trade, and I still really, really, really like this trade, but I haven't pulled the trigger yet. And the reason I haven't pulled the trigger yet is we have not confirmed yet. It tested up last Friday. It tested up on Monday. It tested up on Tuesday, but it's never been able to hold its head above that water. It's never confirmed. So the question is, at what point do you trigger into the trade? So a technique that is very, very tried and true is 10% of the ATR above the high. So if you want to be a conservative trader, you can look at the high of the day, and the high of the day is 1925, Tim. So you can put an order to trigger above 1925, which is 10% of the ATR. So 10% of the ATR is 6 cents. 6 cents above the high, okay, 6 cents above the high is 1931. So the trigger would be at 1931, which is 10% of the ATR above the high of this candle. That is a conservative entry point and a very good technique on triggering. Another more aggressive trigger, and one that I do like employing in this volatile market, is to drop it down into a 15-minute chart and to find some levels of resistance or intraday resistance that you are comfortable triggering above. So for example, Tim, you could say, okay, this level of resistance right here at 1930. Or excuse me, 1930. Maybe you're above that level. Maybe you're above this level. Maybe you're above that level. But there's different ways to look into the trigger. But if you're struggling with triggering, 10% of the ATR above the high is a good triggering technique.
Well, and using some kind of mathematical analysis to always set a rule like that, it produces consistency for traders, and you don't want to trade with emotion. You don't want to guess when to get into stuff. You have to develop entry, exit, trade management techniques. And I think triggering is such a key part of any of it. Some of these stocks, the trigger is clear. And it could be the tail, it could be the body. I've found for technicians, Matt, using some kind of combination between the intraday and the daily chart, if you marry those two things together, is very important. As you're looking at GDX here, Matt, what time frame would you recommend our halftime crew learn to use on the intraday to help them read that?
My favorite's a 15-minute chart.
Mm-hmm.
That's my favorite. So when I'm day trading, Tim, I will do my technical setup on the 15-minute chart, and then I'll do my triggering on the 5-minute chart. So again, technical setup on a longer term time frame, triggering on a shorter term time frame. When I'm looking at swing trading, I do my technical setup on the daily chart, but then I drop it down into a 15-minute chart to get appropriate triggering.
Yeah, give me Goldman Sachs if you would. We had a big debate about Goldman Sachs here on the halftime report a couple of weeks ago, actually.
It wasn't a debate. It was a bloodbath.
I love this one, and I think this is a really wonderful opportunity to teach how triggering has to adjust as the chart develops. If we were looking at this on, say, Saturday or Sunday, Matt, 3 candles ago, we would have had a trigger below the low, at the support point.
It would be a breakout.
Now that it's bear retracing, the trigger would update, correct?
Well, okay. So if you're looking at getting into, Goldman Sachs on a short, and you're looking at it right here, so before this week, right? Mm-hmm. So we're looking at here, you got a standard bearish downtrend, and you're basically saying, okay, if you're into this trade, you're obviously adjusting that stop loss, Tim, because it's at support, correct?
Mm-hmm. Yeah.
Okay. So, but if you're not into the trade, you're like, okay, when do I get into the trade? Well, a standard way to get into the trade on a breakdown is just underneath the lows, right? So you just put it, and on a breakout, my personal role on a breakout, Tim, is not 10% of the ATR. It's 50% of the ATR under support or 50% of the ATR above resistance. So that's my personal rule when it comes to breakouts. On retracements, it's 10% above the high or below the low, depending on the bull or the bear side or the bear side. So at this point, you're looking at the potential trigger, and the ATR at that point was about, what was the ATR here?
Oh, Goldman Sachs, yeah.
Okay, so you're talking somewhere around 205 would be the trigger, right? But now fast forward, Goldman Sachs holds its support channel, starts coming back up into resistance, right? And that's where we're at right now. We're coming back up into that resistance, and it's slowing its head down a little bit. So now I'm not necessarily waiting for it to go all the way back down to 205, which was my trigger coming into the weekend. Now that it's forming a retracement, now I'm looking at back to the retracement roll of 10% of the ATR underneath the low of today.
Yeah, I agree. And by the way, that could even be true tomorrow and the next day. You could have little.
It adjusts on every retracement.
Yeah.
Because retracements, a standard retracement takes 3 to 6, 7 days, correct?
Mm-hmm.
A standard retracement. So if on day 3, day 4, day 5, day 6, day 7, whatever the retracement takes, that trigger will adjust based on the low of that day.
You got to look at Amazon right now. This is what I'm watching probably closest between now and the end of the day. Facebook, Amazon, Google, all these different tech companies.
Oh, Amazon.
The market is trying to stage some kind of comeback, but Amazon just does not want to participate. It's down 2.5% and sitting at a key psychological level, 1,500. Every time a stock goes below 1,500, 1,500% of the time it goes to 1,400. I'm telling you, I'm seeing pressure here. I got to tell you, I'm watching the intraday. I don't have any positions on Amazon. I'm just fascinated with this company because if you track the NASDAQ point for point, in fact, give me a split screen on the two charts. Give me two charts if you would. Side by side, up and down, doesn't matter. Actually, do side by side. I think it'll be easier to see it. Okay. And go down to like a 5-minute, get a clean chart. Very good.
Hold on. I'll get you what you want. You keep talking. I'll get what you want.
Well, literally the movement on the NQ is mirroring the movement on Amazon, almost tick for tick for tick for tick. Sometimes you wonder why the indexes are moving. I keep a 9-view chart of Facebook, Amazon, Netflix, Google, Apple, Microsoft, and then a couple other tech ones that are in the news that day. Because if you ever wonder, well, why did the NASDAQ run from there? Well, it might have been one of those key stocks made it move. When the Amazon chart intraday is sold down to 1,500, the NASDAQ sold down to 6,700. It now has ticked back up in 5 minutes, Matt. It's up 0.5%. Amazon's holding 1,500. This is the whole market today on the technology sector, in my opinion. I think the way Amazon goes will be the way this NQ goes, and I think that's going to stage either the rally or the sell-off into the close.
Those trends, they mirror one another.
They're identical. I mean,
I'm not kidding. They mirror one another. It's the entire market.
This is why people who look at the depth of the market and really are looking at all the subtleties that when you're a beginner, maybe you don't see, why we've called this a top-heavy market, guys. You know, the whole market was being held by Amazon up here at the high. Amazon missed earnings. Now it's selling like crazy. It's trying to hold 1,500. But man, that is a futile attempt. People buying a 1,500 here would be guessing, hoping, throwing a Hail Mary down the field and hoping that it will go back up. And maybe it does, Matt. You know, sometimes Hail Marys are caught. But if that thing sells on pressure from here, and we saw the miss on earnings from the earnings report alone, Matt, stock is down 300 points.
Yeah.
300 points.
Well, Aaron Rodgers isn't throwing this Hail Mary, Tim. I mean, you might as well not even look at the NASDAQ any longer, just look at Amazon. It's ridiculous. But they do mirror one another. Market's not going to recover unless Amazon does.
I agree with that 100%. And if you look at Amazon NQ, now that's on the daily chart. Go down to like a 5-minute, 15-minute. You like the 15 or 5, either one.
15.
Matt, the NASDAQ rattling between the key support and resistance levels that it did. Look at today's action. Amazon would rally and the NASDAQ would rally, and then Amazon would sell and the NASDAQ would sell, and Amazon would rally and the NASDAQ would rally. Even in the last half hour since we started the halftime report, Amazon came down from 1540, 1530 range, and the NASDAQ dropped 100 points.
Mm-hmm.
They are directly correlated right now. Oh, geez. It's going to be fascinating going through the week. Amazon already reported earnings. We've got Facebook tonight. We've got Apple on Thursday. We've got key companies coming up here, Matt. I have no idea where this one's going to settle by the end of the day, but I'm going to be watching Amazon because it's going to give me a read on whether to hedge the overall market right now. And I mean, that's the market we're in. It is just a wild and crazy, wonderful opportunity to be alive and be a trader, guys. If you're learning right now, This is a wonderful time to learn. And if you're a trader right now, make sure your position sizes are in line with your money management. Be disciplined. I don't know, Matt, if you had to pick up or down from here, Amazon's bearish, isn't it?
Oh, if you gave me a pick up or down from here, I'm picking down every day. I'll win out. This is a bearish trend.
Yeah, it's ugly. And I don't think people really comprehend how overvalued a company like this is and how much more room to the downside they could potentially have.
Somebody put a tweet out on Twitter and said, quote, and I can't remember exactly what the quote was, so I'm paraphrasing here, but they said, worst case scenario for Amazon, and don't give me the 1 cent nonsense. And I basically said, given the high valuation on Amazon, if this is a bearish market, you can expect an 80% decline in Amazon before it becomes fair valued. Not overvalued, Tim, before it becomes fair valued.
Yeah, $400 or $500 a share would not surprise me if we're going into a bear market. Now, on any given day, could Amazon be up or down 5, 6, 7%? We saw it with every chart that snapped back. Of course they can.
I also said I didn't expect that to happen. But if you just look at the fair value nature of Amazon, if Amazon goes into that $300, $400, $500 range, Tim, that P ratio will be somewhere around 20 to 30.
It's wild. You know, I love watching, my charts.
It's an amazing market to trade in. It's a very cautious market for investors. You should have been hedged a long time ago. But at the end of the day, Tim, this is a trader's market, and that's what's going to define this market for this week. However, everything we've said on the bearish or the bull case can be blown out of the water with a great or a negative Facebook earnings tonight, or a great or a negative Apple earnings on Thursday. You give me a great Apple earnings on Thursday, Tim, that could spark a massive Santa Claus rally.
An apple a day, huh? Yeah, it could. I mean, Apple's the leader. You want to talk about the top heavy nature of Amazon. Apple's even bigger and more important from a fundamental perspective right now. But let me just throw out the hypothetical, Matt. Put in Apple right there in the chart, and we're not going to spend a lot of time on it. But what makes us all believe, and I am starting to not believe in this, why do we think Apple's going to be any different than all the other stocks that have taken it on the chin over the last month?
It's not if it has bad earnings on Thursday.
Dude, I'm telling you,
It's not, but it has held up. I mean, Apple broke that 215 barrier, and it screamed down yesterday, Tim.
Yeah.
And you know why that happened, guys? And if anybody was trading Apple or was in Apple for any capacity, everybody put a stop loss under 215. Everybody, Tim, you had your stop loss under 215. I had my stop loss under 215 before I got out a week and a half ago. So everybody had their stop loss under 215. Once it triggered under these levels under 215, then triggered underneath the lows here, it just screamed down, snapped back a little bit today. But to me, this market does hinge on Facebook tonight, Apple on Thursday, unemployment numbers on Friday. I don't care what anybody says out there. Trends, patterns, what President Trump says or tweets, it doesn't matter to me. It's all nonsense until we see these numbers come in this week.
I agree with that. Bring me up Facebook. Probably the last one, most important conversation we need to have here today is on Facebook earnings. And that's because the volatility tomorrow, everything, Facebook could easily gap up or down from here. We have no idea. So let's start with that. But we do have an idea of what the expected volatility is, Matt. And there's a couple of lessons to learn here about trading earnings, and especially inverted flies, that I think that Facebook is going to help us explain here this morning. It opened up this morning, and if you built it right at the open, you would have anchored at 140 on the strike. And now we have no idea where it's going to settle in by 2 o'clock Mountain. Facebook, last time they had earnings, Matt, what was the gap right there?
217 to 1. It's about 217, 1725. So it's about 42 points. 42 points. I'm getting the percentage wise here, Tim, not just the points, because Facebook's changed its price so dramatically over the last 6 months. 42 divided by 218. Percentage-wise, that drove 19%, Tim. The second one, and basically, guys, when we're prepping earnings plays, we have to do a couple different things. Number one, we have to look at the average gap range of the previous 4 earnings, and then we compare that against the market maker move. The market maker move, Tim, is expecting to move right at I want to say 11 points. I just looked at it. Yep, 11 points, which equates to 7.8% projected gap range one way or the other. Now that projected gap range, guys, that could be up or down. The market does not have a bias in that up or down. The market is projecting an average gap here at 7.8%. The first one here moved at 19%. The second one moved from 160 up to 173. That was a 13-point movement divided by 160 points at that point. And that equals an 8% gap range. The third one over here, Tim, gapped, well, let's go here. So it went from 186, very nominal, just a two-point movement on the gap range, Tim. 2 points divided by the 188. That's about a 1% movement. And then the third one over here, I'm going to have to get just slightly more time frame so I can get that that fourth gap range over. So 1, 2, yep, right there. Nope. Give me a second. I hate when that does that. Drives me nuts. So the fourth one here would be right into this range, Tim, and it went from 170 up to 174-point movement. That's about 5% movement. So, Tim, if I add up the average gap range over the last 4 earnings announcement, 19 plus 8 plus 1 plus 5 divided by 4, that equals an average gap range of 8.25% versus the expectation of 7.8%. The average gap range is slightly more than the expectation, but that's really because of what happened last time. But for Facebook, and I said it yesterday, it really doesn't matter for me, okay? For Facebook, I expect movement here. I expect movement. It's a leader in the market. The market's volatile. It's got a lot of misdirection in it, and it's one of the 2 most important earnings reports we're going to get this week. I expect it to move.
I'm looking at that. I priced out a 16-day contract. How many days is November right there? 17 days.
I would do 17 here.
The hard thing is, and I think the lesson really is this morning, if you were looking at it, you would have done the 140 because it was down at near 140. If you would have waited till midday, I mean, we were up around 143. Now we're back down at like 141. You can't do inverted flies till the last hour of the day. And by the way,
that's not always the case, Tim. That's not always the case. I've done inverted flies in a normal market condition a day before the earnings.
Sure.
I've done them in the morning before an earnings report. I've done them a week before the earnings report before, Tim. So it's only in this market condition that doing earnings plays is somewhat of a timing aspect. It's a little more complicated. If you do it in the morning here on Facebook, that midpoint of the fly, and what an inverted fly is, guys, is we're basically selling the body and we're buying the wings, basically. Mm-hmm. So when we're talking about the body, we're talking about that at the money strike price, that 0.50 delta is what you're looking at. But Tim, in this market condition, that at the money strike price in the morning on Facebook today, that what was it today? What was the open price today? It
opened up around 141.
Okay. So if you did it at the open, okay, if you did it at the open, let me kind of come back down here. If you did it at the open, you were looking at a 140 strike price right there, currently with a delta of 0.55. If you did it midday, it was at 144, which means the mid price is right there at a 47 delta. And if you wait till the close, my hell, it could be anywhere. So timing on these earnings plays has been a little difficult because of the volatility, the recent volatility. What I've found that works is right about that last hour in the day. You can't, and this is crazy, guys. I get that. But if you wait till the last 15 minutes of the day, watch those bid-ask spreads open up. Just watch them open up. Okay. They're just going to open up and the market makers will be like, oh, thanks for playing. Right. If you do it in the morning, you could get a random type bid-ask, not a random, but you could get off on your body. That last hour, that last hour of the day, right about 3 o'clock Eastern, I think is the best time to play it.
Facebook earnings tonight. What's the MMM right there? 10, 11?
MMM's 11, which means if you're pricing in a fly right now, you're looking at the 51 delta. We're going down to sell. We're going down to the fly. That's the butterfly. And you probably want to do about a 6-point range, a 6-point range. So if I'm looking at the 142, you're going to go out to the 148 by the 136. And that's not traded. So let's go to 135. by the 147. Okay, so I'm doing a 5-point fly here, Tim. I'm buying 2 contracts at the money. That's the 142 strike price. I'm selling an out of the money call option at the 135, and I'm selling an in the money call option at 147. That's about 1/2 the market maker move, which is my standard way of approaching flies on earnings. We're getting a $1.65 credit for 535 buying power. So once again, $1.65 divided by 535 per contract. Tim, you got to project a 30% ROI. That's a no-brainer for me. However, okay, you're going to have difficulty getting filled today. So you need to understand what you're doing. And if you are not in front of the market tomorrow, you cannot trade earnings.
Correct. I mean, the management, I mean, we've seen this with everything. Netflix gapped up, sold off. You had to be able to manage that. We've seen a lot of these big high flyers, Matt. They'll gap and run, they'll gap and sell. There's extreme volatility. And managing the inverted fly is the tricky part because you have to be able to get out of the trade correctly.
Oh, yeah. It's because I don't want to say rarely, but most of the time you're breaking the wings.
Mm-hmm.
Agreed?
Yeah. And
most of the time you're doing some advanced management technique here. But from an overall trade perspective, I do like this trade.
I do too. I like some kind of bi-directional volatility play on Facebook. Either way, guys, it's going to drive the market. So
given the emotion in this market, given Facebook, the 30% decline Facebook had, or excuse me, the 19% decline Facebook had last earnings report, given every condition out there, the market is going to move Facebook, in my opinion. If it dojis tomorrow, I would be shocked. I would be shocked. And I've been shocked in the market. So that happens. But for me, probability, projected ROI, it's a good trade.
Guys, and this is a good show. Thanks for being here. Halftime report, tackletrading.com.
I got to make a trade on Disney, though, Tim, real quick.
Because you're sending your wife to Disney. All right.
All going to Disneyland, as they like to do on Halloween. It drives me nuts. And I know how much money they're going to spend. So I usually like shorting Disney, though. That's the thing that makes me happy is shorting Disney when they go and spend all that money. But now there's no trade here on Disney.
There is no trade. There is no fast pass.
There's no fast pass here. Guys, thank you so much for being the best part of Tackle Trading. Thank you for coming here and supporting the Halftime Report. Give us a like and share. We'll see you guys next tomorrow. Thanks, everybody.
Peace.